welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson. Time to do an update video. Okay, so this is where we're at currently. We have been slowly grinding our way upwards. We did hit a top right around the 12,800 to 12,850 mark. And since then, of course, we've seen a little bit of a slide. Here's the deal. We really don't have any overall further direction given by what we've had put in front of us the last few days. So I'm very, very neutral going into tomorrow's trading. Overall, though, I think longer term, I shouldn't say, well, let me divide this up. Medium term, that would be over the next month or so. I still do see some higher prices coming. I don't think we're quite done with this move to the upside. Longer term, I'm probably a little bit more bearish when we're talking about 4 or 5 months out. And shorter term, I'm very neutral as it is right now. If you like Elliott Wave and know anything about it, we're in a situation here where we could count this about literally one of probably 4 different ways. I have really kind of 2 or 3 of them are actually a little bit more on the bearish side, whereas one of them is a little bit more on the bullish side. But overall, the point here being there really is no given direction at this point. We have seen a break of this particular line here on the Dow. We've seen a retest of it. It's holding very nice. I would expect that to hold going forward as well. But this consolidation that we've seen after today's action did not lead us into any kind of a overall strong directional move one way or the other. Now, pundits out there are going to say it's going down. Some are going to say it's going up. I'll be flat honest. It's all really kind of a guess right now. Okay, we're in a very, very tight consolidation. That can be a break up. That can be a breakdown. And the best thing you can do as a trader is to just allow the markets to tell you which way to go. So this is what I'm recommending. If you're looking at maybe trading the Dow or trading the diamonds or whatever, I really like, and I'll go to the daily here on the Dow, I really like pushes up and over 12.8 and back below about 12.5, 12.450, somewhere down in there for your long and your short entries. As you've seen, look, this whole run up has been up, pullback, up, sideways, up, sideways, up, little bit of a pullback, up, little bit of a deeper pullback here, but we're fighting with that 20-day moving average. So if you're a Dow player, you want to wait until we break that 20-day moving average, and then maybe, and just maybe, you have a shot at actually making a little bit of money to the short side. So you want to dip your toe in, but you want to be very, very cautious. Look at what we've seen. Pullbacks here. All of this stuff leading up to this looks very similar to what we've seen here, even though it's been a little deeper than normal. 12,550 to 12,850 gives us 300 points, high to low here. Truth of the matter is it's always resolved itself to the upside, so you have to give at least the bulls their due credit here. Wait for the breaks, 12.8 and 12.5, or 12 below the 20-day at 12,550. Those are your moments to then maybe take an attempt at a trade. If you're just trying to play the sloppy chop, as I'll show you on the 60-minute, anything in between here, there's a really good chance you're going to get your hand slapped. Today, I tried a couple of trades. But I did a lot of them early when we were running up or running down over the last couple days. But when it starts to get sideways like this, I've really tried to train myself to be very good about staying out of the markets because that's the best time to see your profits dwindle. You want to let the markets tell you which way to go and be patient. Be patient with your trades. All right, so going forward, you know where I stand on the Dow. The NASDAQ, however, is holding beautifully to this lower line that it has been tracing since all the way back in December. This is a very nice move by the NASDAQ, showing it's really the NDX 100, but the point is the NASDAQ has been very strong, typically is, doing very well with the likes of Apple and such. Google, slight setback, but you can see nothing too damaging to the NASDAQ as it's still recovered, pulling itself back into support. We'll see if we get that further push. I like 2480. I like above 2480 and below 2440 on these trades, both long and short on the NASDAQ. I'm not a big short of the NASDAQ person. Don't typically like to short the NASDAQ because it is so strong. I always prefer to go long the NASDAQ as opposed to going short, but those will be your options coming into tomorrow. Same concept here. Up, pullback, up, sideways, up, pullback, up, sideways. I don't know. This whole thing's been sideways. So for the last week, you can see we've done nothing but basically move straight to the right. No real indication of move up or down or of anything of the sort. So putting in what could be a topping candle here, but to be honest, I am not sold on that yet, quite yet. Wait for your breaks, 2480, 2440. That's where I'd be recommending. From a weekly perspective too, notice how we broke this overhead resistance and have now been holding very nicely at that level. So far so good for the bulls as they continue their slow yet steady move to the upside. SPX on a 60-minute also holding very nicely to its lower line down in here. Talk about this being the top of a wave in here, and this was maybe an ABC correction. I'm going to tell you, I would not be sold on that. This consolidation right in here has got to break first before you look for your move. I like 1330 and I like 1300, and those are my two levels I'd be recommending for you to watch and wait for before you make any kind of a move within the market itself. Just let this thing play itself out. I do believe there's still more upside left to come, but we could very easily see another drop back into this area here. I love the 1285 to 1290 area, as low as maybe 1280 ish, something like that. I like any one of those areas. If you're, I play a lot of the futures during the course of the day, and I like 1275 to 1280 on the futures, and that's going to work very nicely with a 1280 to 1285. That's kind of wishful thinking on my part, but if we get those breaks below 1300, 1290 to 1285, I think is very plausible at that point. So be watching for those breaks going forward as you see it hold this line very nicely so far. From a daily, same type of thing, working on that 20-day. Below 1300 gets you below the 20-day, so very important with the doji today showing us lots of indecision left in the markets. Little down, little up, little right back to the beginning. So not a lot of moves in here. Guys, when the bears decide to come in, you're going to see it. It's going to be big red candles, and it's going to be day after day after day. And we haven't seen it. We're not seeing big red candles, and we're not seeing necessarily day after day after day. We are pulling back here, so I guess you could call that 4 days in a row. But the truth of the matter is it's really not doing anything in through here. Small, very almost microscopic moves within the market itself. 1312 with a high of about 1332 gives you 20 points from high to low over the last 4 days. That's nothing. 20 points high to low? I'm looking for 20 points, 30 points in 1 day. Just in the move itself. That's not including high to low. Just the move itself being down 20 points or up 20 points as it might be. Any further pushes to the upside, guys? I'll be honest, I don't know if I expect any more really large white candles like this out of the deal. We might get candles in this size, which is, might cover over the course of a day 10 points, something like that. I just don't know if we've got the power, Captain, to continue this upward push and put in these kind of big white candles. So even though I am a little bit more bullish on the markets in the longer term, once we make this turn, once we get this pullback over with and make that turn to the upside, I still think it's going to be smaller candles like this that we'll be left with on a more regular basis until we see a deeper pullback. That pullback might be 50 points, it might be 100 points. I really don't know at this point. It's way too early to tell. I just don't expect, if we continue our grind to the upside without a major pullback, to see big white candles like that quite yet. I just don't expect to see it. The VIX up a little bit, but overall, bigger picture, guys, it has wound its way down back into this level that shows me a lot of complacency, and that's the 15 to 20 range. So until it starts to get back up into these higher areas and stay in these higher areas on a consistent basis, I think the complacency is right back in the markets. People are on guard. They're cautious, but according to the VIX, they're not really too nervous about things at this point, even with the Greece deal, even with the potential Iranian oil problem. The news makes no difference. It shows what you need to see is right here in front of you. Okay, forget the news for a second. You can see everything you need to see right in front of you. The chart will tell you. In this case, the VIX chart tells me that there really is quite a bit of complacency in the market. People aren't panicking. They're not running out to buy a bunch of puts, and they're not exactly hedging in a big way. Not yet. So till this VIX starts to get into these upper areas, not all that worried about it. Here's the VIX on a weekly, and you can see that grind to the downside right back in and around that 20 area. So back above 20. Now maybe we've got something to start looking at. That should coincide with a drop in the markets. But as it is, we've been as low as about 16 or 17 here, putting us right back in the area that we sat in for most of 2010 and almost the entire, well, I should say most of 2011. So for a good year here, we hung out in that area and we're right back to it now. After a brief pause here where we were gone from it for about, oh geez, 8-10 months, we're right back into it. So the complacency is starting to find itself find itself right back where it was a year ago, and that is pretty complacent. FAS 60 minute, FAS and FAZ giving me two different kind of looks here. I really like this one though. If you guys like to play FAS, I like this one above about 81.50 and below 77. It's been caught in this range for quite a while, and I think once it makes a break, you've got an opportunity to pull some money out of this thing, but you've got to be patient. It's been very difficult to play it when it's not moving anywhere. Small, little tiny candles up and down are, once again, a really good ingredient for disaster. They chop you out of trades. They don't allow you to stay in for any length of time. It gets very tedious. Most people get bored. Then they want to make a move, and a lot of times they jump into something that ends up burning them. So let this thing break. Either above here or below there before you make your move. Here it is on a daily, and you can see we've been up and up and up, and much like the NASDAQ, not really going anywhere over the last week or even 2 weeks here in the FAS as we wander our way sideways. Holding nicely to the 20-day moving average, and a long ways from major lower support. FAZ, on the other hand, really like what I see here on the 60 minute. This thing's starting to kind of break its way to the upside. It could come back down, retest this line, but that's what I'd be watching on any drop to the downside. If you like this one as a long play, and I do myself actually, above 31 is kind of what I'm watching. There's my eye on FAZ is above 31 for my next trade. That'll make it the most interesting to me from a bullish standpoint. Now, from a daily, love this pattern as well, called a falling wedge, and that ends up being usually, in most cases, a little bit more bullish than it is bearish, and it can stay in this thing for, though, another month or so. You never know. But loving the 3150, I think that's a really good option. It is 3150. If it gets up and above that area, will also put you above the 20-day moving average, and I always love making moves at that time. So those are the marks to be watching on FAZ if you guys like to play that thing. To the short side, don't have any recommendations on FAZ at all. Just to the long side, and that's in case the market drops or there's problems in the financial arena. You'll see it reflected in those stocks usually first. You'll see it reflected there. They obviously because they follow the financial. Okay, that'll do it for today's video, guys. Like I said, very, very neutral going into tomorrow's trading. And wait for this thing to break before you make any kind of a move. Just wait for it. Wait for those levels that I've given you to break, and then dip your toe back in the water. But when the thing moves sideways like this, it's a great opportunity to lose your butt. Just don't do it. Just stay out of it. Walk away from your computer, turn it off, go walk the dog, go to lunch. I don't care, but stay away from this kind of chop. It's the best way to lose your money. All right, if you enjoy these types of videos, I do them every day for the subscribers, $28 a month. I do them every day, I should say, but Saturday, about $1 a day over the course of a month. I go into a lot more detail about the indices. We talk about the Russells. I've got gold and oil on there, plus I give stock picks during the course of the week, which I make recommendations on, both long and short entries for those particular items, to give us all something else to look at and something else to play when we are chopping sideways in the indices. Sometimes the stocks are moving very nicely when this is going on, so at least we can make some money over the course of a week, even when the markets are not moving. I have the mentoring course. If you want to do this for a living and you just can't seem to find yourself on the right side of the trade, the mentoring course is definitely worth your while. Something I highly recommend to everybody. It gives you the tools you're going to need to really become consistently successful in the markets. Doesn't mean it doesn't take time, and it doesn't mean it doesn't take effort. It's not easy. But if you know what you're looking at, if you know what you're looking for, it can make it a whole lot easier. Okay, you'll still have to learn how to apply everything and how to make it all work together, but at least you know where to start. Right now, if you sit down in front of a chart and you go, I don't even know what I'm looking at. What? I guess long. I don't know. I don't even know what to look at here. if that's where you're at in your trading, then an education, you can never go wrong with an education anyway, but an education is definitely warranted, and I highly recommend it to everybody out there. All right, I will leave you guys with that, and hopefully we'll have time to do another video on Thursday. Would love to catch up with you guys at least twice a week. We'll see if we can arrange for that. Have a good one. See you later.